Our report on the financial statements is on page 16 of the annual report, and I'll read it to you. Report of the independent auditor to the members of KenolKobil Limited. Report on the financial statements. We have audited the accompanying consolidated financial statements of KenolKobil Limited and its subsidiaries as set out on pages 18 to 68. These financial statements comprise the consolidated statement of financial position at 31st December 2011 and the consolidated income statement, consolidated statement of comprehensive income, consolidated statement of changes in equity, and the consolidated statement of cash flows for the year then ended, together with the statement of financial position of the company standing alone as at 31st December 2011, and the statement of changes in equity of the company for the year then ended, and a summary of significant accounting policies and other explanatory notes. Directors' responsibility for the financial statements. The directors are responsible for the preparation and fair presentation of these financial statements in accordance with international financial reporting standards and with the requirements of the Kenyan Companies Act, and for such internal control as the directors determine necessary to enable the preparation of financial statements that are free from material misstatements, whether due to fraud or error. Auditor's responsibility. Our responsibility is to express an opinion on the financial statements based on our audit. We conducted our audit in accordance with international standards on auditing. Those standards require that we comply with ethical requirements and plan and perform our audit to obtain reasonable assurance that the financial statements are free from material misstatement. An audit involves performing procedures to obtain audit evidence about the amounts and disclosures in the financial statements. The procedures selected depend on the auditor's judgment, including the assessment of the risks of material misstatement of the financial statements, whether due to fraud or error. In making those risk assessments, the auditor considers internal control relevant to the company's preparation and fair presentation of the financial statements in order to design audit procedures that are appropriate in the circumstances, but not for the purposes of expressing an opinion on the effectiveness of the company's internal control. An audit also includes evaluating the appropriateness of accounting policies used and the reasonableness of accounting estimates made by the directors, as well as evaluating the overall presentation of the financial statements. We believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for our opinion. In our opinion, the accompanying financial statements give a true and fair view of the state of the financial affairs of the group and of the company at 31st December 2011, and of the profit and cash flows of the group for the year then ended in accordance with international financial reporting standards and the Kenyan Companies Act. Report of the independent auditor to the members of KenolKobil is continued on page 17, ladies and gentlemen. Report on other legal requirements. The Kenyan Companies Act requires that in carrying out our audit, we consider and report to you on the following matters. We confirm that, 1, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. 2, in our opinion, proper books of account have been kept by the company so far as appears from my examination of those books. And 3, the company's statement of financial position and statement of comprehensive income are in agreement with the books of account. And our opinion is dated 29th of February 2012. Thank you, ladies and gentlemen.
Thank you, Peter. I shall now be pleased, together with the board of directors and the management team here, to answer questions on the financial statements of which you have a copy.
Thank you, Mr. Chairman. My name is Matola Timothy. I was very much impressed with the annual report on the account, and I observed in page 6 when we were looking at the cost of sale, and they leave one another with sale and the cost of sale. They leave one another with only one margin, very little. How can that cost be controlled that it could not be very high than it make non-profitability? If you look at page 6, I think how it has been really affecting the income of the company because the cost seems to be very high. Also, when we look at the cost, like disposal of properties, plants, and other things. Are these being disposed by public auction, or they are being sold by private means? Because if it is not being illustrated, it may be either they are in-house sale or disposed to members of the staff, or anybody can buy them. Thank you.
Okay, Timothy, I must admit I'm not so clear on your first question in respect of cost of sales. And you drew our attention to page 6. I think you are referring to the increase, is it from 1.19 to that?
First of all, Timothy, thanks for your question. But on page 6, you're looking at the dollar, you're looking at US dollar income statement, and on the notes that you were referring to, it's in Kenya shillings. So if you want to look at the notes, you should look at the income statement on shillings, which is on page 18. So that is like for like. And I think that's why you're looking at the figure and you are referring to the lesser amounts. It's actually in US dollars. So on page 16, it's in Kenya shillings.
Okay, there is of course an increase between 2011 and 2010 in cost of sales, and two reasons for that. One is of course much higher sales, okay, much higher sales. And secondly is the cost of goods, the cost of oil on average for the year 2011 vis-a-vis 2010 went up, if I'm not mistaken, 54% on average. So of course it is reflected. Now on fixed assets, on fixed assets actually what we have sold, just to tell you, first of course we go through a tender and so on, but what we have sold, it was a compulsory sales of Waraka, Muranga, and this was by government road authority, and there was a house which I bought according to my agreement with the board. Okay? Thanks. Any other questions? Yes, please, there.
Thank you, Mr. Chairman. My name is Gabriel Audi. Just also referring to the same page as 6 or 18. Okay, there's a statement which is there, and I would like you to expand on it. On the profit of the year, you're saying it has been dealt with in the accounts of the company. Please, can you expand to us that? Because I don't really understand how it has been dealt with in the accounts of the company.
Okay, the profit, this income statement on page 18 is the consolidated income statement for the group. So it includes all the subsidiaries as well that is in KenolKobil. The statement that says the 2.8 billion shillings that is in the company is in Kenya, KenolKobil company in Kenya. Because in terms of regulatory requirements, you report your company's figures separately, and this is what we're referring to. The 2.8 is in the company that's registered in Kenya, but the total profit for the year, the 3.3 billion, is the consolidated for the group.
Yeah, please.
Thank you, Mr. Chairman. I have a quick question. And that is on page 18. I want to revisit the profit for the year and 2.8 billion. Now, is it a requirement that you can avoid the company's income statement from here? And is that company's statement available in the website so that if I want to access it, I can get it there? The second one, is on lower earning per share, you have basic and diluted. It seems that you will always have a figure for diluted. This is because of the options. Now, is that the case? That every year we will have at least a plus or minus increase in the total share holdings? Thank you.
Thanks for the question. When we present these financial statements, it's really in respect of what is required by the regulations, and also we're reporting according to IFRS, which is the International Financial Reporting Standards. And there is not a requirement that we report the income statement of the company separately, and that's why we've never really done it. But we can do it. It's not. We just don't do it in our financial statement because it's not a requirement. But we can avail it. It's not a problem. Yeah. And then the other question that you had about the earnings per share, it is a requirement that we compute the basic earnings per share using the full share capital issued, of course. The diluted earnings per share is also, in terms of regulation, a requirement of how you compute it. And for us, mainly, it is diluted by the ESOP shares, yes.
Okay, thank you.
Thank you, Rakesh Gadani. You did mention in your statement when you were talking to us that unfortunately the forwards taken are hurting us in the first quarter, have hurt us in the first quarter, and are going to hurt us in the second quarter, at least the beginning of it. Going through the report, I noticed two things. Under note number 14 and note number 26, there are two items, and I need to brush up on my accounting here, but Pat here can help me with that right now. But the question is, considering our profits last year were about 3.2 billion, if I add those two numbers, I get about 3.8 billion. So yes, you have told us it has hurt us, but what I'd like to know is the extent, as far as is possible, that you know today, not what's going to happen in the future. How much is that quantifiable? What's the quantity of the hurt that we will feel? So that's the first question. So again, under note 14, there's about, I think, 1.46, and note 26. So those were the two. That's the question I have as far as the accounts are concerned. Can I reserve the other questions for afterwards, the ones that don't deal with the accounts?
Thanks, Rakesh. The provisions made in the financial statements for the hedge accounting reflects the computation that we do at the year end, taking, of course, the foreign exchange spot where it is and the interest differentials, and then doing mark-to-market computations, and then doing the provision. What you see in the financial statements is very close to what we have been hit in the first quarter, and then, of course, the estimate going into the second quarter. The figure that we've been impacted with is really the hedge instruments that crystallize on the day that they do, on due dates, and then it depends very much on where the shilling spot rates are to determine the actual loss. At the year end, when we were computing these exchange losses, the exchange rate was 85.05, so that was what was used to compute these losses. As you well know, the shilling has actually strengthened further in the first quarter of this year. We're trading range bound now between 83.35, 83.45. So if you do your estimates based on that, you can see it is slightly worse than what we've provided for. The actual figure I can't disclose now. As you know, we're a public company and it's not been published in the public domain yet. The figures will be seen in the June financial statements, but it's very close to what we have, plus this additional weakening of the Kenya shilling.
Yeah. Peter.
Thank you, Mr. Chairman.
Oh, okay.
My question comes from page 21. There is current liabilities. There is payables and accrued expenses, note 28. We note that there was an increase from year 2010 from 3 billion to 19 billion. And when you go to page 65 with the notes, there is a payable to related companies. There was a payment of 9.3 billion, and 2010 was 2.4 billion. There was an increase of around 7 billion in payables to related companies. I want to know which are these related companies, and there is also other payables, which is 7 billion from 476 million. Can you expound which are these other payables, 7 billion?
Yes, we can. We'll explain to you, but.
Okay, the figures that make up the trade payables and other payables is really, as the name says, it's all your trade accounts and also accruals. When you close off the year end, there are a lot of expenses that haven't crystallized yet, but you know that they're coming. For example, if you've imported cargoes of product, it's on the high seas coming to Kenya or to our subsidiaries, we have to provide for those. And those ones will typically be under the payables or other payables as an accrual. So what you see there in the figures of that 7 billion is really the provision for all the normal expenses of the company, product imports. There may be some maintenance work that were not paid at the year end, but we know they've been committed to and we have to provide for those. Or it could be distribution charges, anything to do with the normal business operations of the business. So those are normal business accruals and provisions. And you should always look at the trade payables together with the other payables, because that gives you a good idea of what actually needs to be paid in the coming year. As far as the payables to related companies are concerned, you're picking up that figure from the column of company, which is actually KenolKobil in Kenya. Now, as I said previously, KenolKobil is a company that has many subsidiaries, so it's made up of all our subsidiaries in the region. It could be balances with Kobil Rwanda, Kobil Burundi, Kobil Tanzania, and also Kobil Petroleum itself. As you know, a few years back, Kobil became a subsidiary, and between KenolKobil and Kobil, there's trading relationships, and both companies have figures that they deal with between each other, and that is part of that related parties' balances. We have also seen escalated trading with Kobil Tanzania, with the big depot that we acquired there. A lot more cargoes are going to that depot, so the intercompany balances between Kenya and Kobil Tanzania have also increased. So it's actually a growth in the level of activities that we've had in the group.
Okay, thank you. Last question before we go on. Okay, thank you. I trust that we have now given adequate consideration to all the matters contained in the annual report and the questions raised by the members of the shareholders. May I now request someone kindly propose that the financial statements for the year ended 31st December 2011, together with the report of the chairman and group managing director and the reports of the directors and auditors thereon, as submitted to this meeting, be and are hereby adopted. Proposer, Rakesh, Sunil Shah, seconder. Thank you very much. All in favor? Thank you. Item 4A on the agenda is to confirm the payment of interim dividend of Kenya shilling 57 cents per share, which was paid during the year. Item 4B on the agenda is to declare a final dividend of Kenya shilling 43 cents per share for the year ended December 2011. Take note that the registrar will be closed from the close of business on Monday 30th, April 2012 to Wednesday, 2nd May 2012 for the purpose of processing the dividend. May I have a proposal? Rakesh? I love my dividends. You like your dividends. Excellent. And Mr. Tago? Jeremiah Tago.
Mr. Chairman.
Please.
Please don't delay the dividends. Pat knows.
Yes, yes. So we apologize for that. The last time, if shareholders recall, there were issues with getting, a lot of shareholders wanted their dividends paid electronically, and there were problems with getting the forms signed and getting the processes done. Livingston's very much aware of the delays, and we apologize for that. There won't be, but we actually had to get all the documentation right before we do any payments.
So maybe Livingstone commit itself? There will be no delays?
No, there will be no delays, Rakesh. There will be no delays. And as explained by Pat, it was a new procedure, and we were dealing with money, so the reviews had to be very thorough before we release the monies to these particular accounts.
Thank you. Seconder?
No, I want to talk about the registrar, Livingstone registrar. Those people, they are not efficient at all. I had even tried a letter to them. I got that dividend of 7 cents after 3 months after you declared the dividend. I had even to write a letter to Capital Markets Authority, complaints section. Registrar, those Livingstone registrars, even if I ask him, my name is Joseph Kamagetori. You got it very late, like myself, until I intervened with the Capital Markets Authority. Thank you.
First, that was exactly the point that Mr. Rakesh raised, and we answered it. And as you noticed, the company and the registrar, Livingstone, apologized, and they explained why, and they promised, we promised all together that this year it will not occur again. Okay, Joseph, we promise you. And next time, by the way, if you come across something like that and delays, you can always contact any of us directly. Okay, I don't know where you live. If you live in Nairobi, you can come to the office. If not, you can always contact us. My email is there. Pat's email is there on the website. You can easily access. You don't need to go as far as CMA.